Howdy out there, friends. This is Darius Dale here to welcome you to our macro minute for Thursday, September 15th, 2022. Starting with asset markets, we have stocks down this morning, commodities down, crypto mixed, dollar up, global bond yields up. Market moving headlines. So Putin and President Xi over in China are singing Kumbaya. So President Xi Jinping and Vladimir Putin began their first in-person talk since the war on Ukraine. The two leaders sat down in the Uzbekistan city of Samarkand, according to TASS news agency. Putin and Xi, Putin told Xi that he understands his concerns about Ukraine and appreciates China's "quote unquote" balanced position. He added that Russia condemns U.S. provocations over Taiwan. So my interpretation of this is really not materially advancing the ball relative to sort of their meeting back, I want to say in early February, just prior to Russia's incursion of Ukraine. So, we got President Xi's, he's up for sort of, if you can call it, re-election in the communist sense next month when the Chinese Communist Party has their party Congress. It's not clear that he may, in fact, get the nod. Obviously all the consensus view is that he's likely to get the nod, just given some of the tightening that he's done with respect to political rivals in terms of kicking them out of contention. But it's not very clear. Obviously, China's economy is in the dumps. We talked about that in the leadoff morning note today in terms of the liquidity trap that the Chinese economy continues to be mired in through a variety of different metrics in the Chinese financial sector. So if you care about China, you care about Chinese demand, you care about Chinese demand for commodity imports, et cetera, definitely check out that note as well as our September 9th note where we go into those dynamics in more detail. Welcome to the post-merge world. So crypto's most important commercial highway, Ethereum, just got repaid. For those of you who are buried with your hand, his heads are buried under the sand. The software upgrade called the Merge will cut the network's energy consumption by an estimated 99% and allow it to scale up. I guess it's the transition from proof of work to proof of stake. It also changes the properties of Ether and makes it more akin to yield-bearing securities. Yield-bearing, what? The S word now. You know what the S word means. The S word gets the regulators knocking. And at the end of the day, I do believe that regulation is positive for the cryptocurrency universe and digital asset investing long term. It just might not be so positive in the moment because typically what happens is regulators see declining prices, very low prices. They think people got hurt and weren't really aware of the risks. And then they generally bring out their brooms and their mops and they try to clean things up. So, but ultimately that cleanup process will lead to more institutional adoption of these asset classes and more importantly, more broader adoption of these digital finance decentralized finance tools throughout the economy. So, it's a process. It's not a sprint. I think investors who invest in the cryptocurrency space are well aware of that. Obviously, we're in a third or fourth big crypto winter bear market that we here at 42 Macro helped investors position very well since going back to November and December. Position very well for. Big movers this morning. Crude oil off another 3%, down another 6% month over month. There's been a dog of a trade there for the energy bull community. Ethereum minus 1% today. So it's buy the rumor, sell the news event. It's down 17% month over month. So I guess what Vitalik said, we're all systems go for September. Everyone took profits in what had been a pretty good trade. If you look at the 3-month performance, Ethereum's up 35%. Whereas Bitcoin is down 7%. So if you're long Ethereum, you have to be very concerned about that spread and the propensity for profit taking to beget more profit taking, to beget more profit taking, to beget more profit taking. So again, you know what to do. We signaled Ethereum and Bitcoin as being overbought per our probable ranges, I want to say on Friday of last week. And those are looking to be quite true. Anyway, we told you bad data is bad for the market when you're in phase 3 or phase 4 or phase 5 of the global liquidity cycle downturn. We talked about those phases in the program, so I don't want to unpack that can of worms, but we'll just unpack the retail sales and industrial production data for today. Headline retail sales slowed 30 basis points to 3.6 on a 3-month annualized basis. We're looking at data points sequentially, looking at the trends there. That's the lowest print we've seen since December 2021. Retail sales control group, so core retail sales, as some people like to call them, slowed 330 basis points to 5.9% in August on a 3-month annualized basis. That's the lowest print we've seen in 4 months. Industrial production slowed 40 basis points to 1.4% to on a 3-month annualized basis. That's the lowest print we've seen since September 2021. And then capacity utilization. So we're traversing allegedly past the peak in terms of capacity utilization, slowed 20 basis points to 80%. In terms of 80% of overall capacity being utilized, it's the lowest print we've seen in a couple of months. But if you look at it on a year-over-year basis, capacity utilization slowed 30 basis points to about 2%. That's the lowest print we've seen since February 21. So we're seeing some pressure come out of the economy. The resilient economy theme is starting to wear off as we take it to the chart here. So what I'm showing here in this chart across these different indicators is the 2015 to 2019 trend. So just to give you an idea, kind of where the data point or where this time series trended pre-COVID, the prior three-month annualized growth rate and the latest 3-month annualized growth rate in the blue bar. As you can see, retail sales control group, core retail sales, which excludes things like gas station, building materials for things like Home Depot, wood, lumber, all that stuff. That stuff needs to be a lot more cyclical. This is less noisy, so it's a big slowdown. If you look at it on a 3-month annualized basis, decent slowdown in industrial production as well, which is now again the slowest number we've seen since September 21. Two things I call out is that the U.S. economy had been quite resilient. If you look at where we were kind of on a 3-month annualized basis through July, 1.8% in industrial production, well north of the pre-COVID trend, 9.2% in July, multiples of the pre-COVID trend there. So there was the data were showing that the U.S. economy was very resilient. Again, this is nominal, this is real because industrial production is a volume index. But now we're actually starting to lose a lot of that steam heading down the backside of the ladder here. So again, when we're in a situation where Fed and other central banks are continuing to tighten longer than the investors want them to, and more importantly, signaling that there will be no easing on any investable, risk manageable horizon, that's an issue. Growth data starts to slow because the market's going to get nervous that the Fed put isn't there because the Fed is telling you that the Fed put isn't there. So as long as the economy hangs in there and it's fine, it's all a dandy. But then when the economy starts to slow and there is no Fed put, that's when you open up a pocket of downside risk in the market. And as I talked about on Real Vision, I think that is a Q4. That's going to become increasingly a market risk as we traverse throughout Q4, because again, the data are likely to slow at a more expeditious pace in the fourth quarter and into the first quarter of next year, at least according to our models at 42 Macro, which I'm pretty sure are some of the most sophisticated that I've seen out there. But I haven't seen them all. Anyway, U.S. dollar, looking at it's from just getting to our volatility adjusted momentum signals and probable range process. Dollar is still bullish. VAMs in the middle of range. Gold bearish. VAMs in the middle of range. Spoiler alert: everything's in the middle of range this morning. So 10-year nominal treasury bullish, or not in the middle of the range, but 7 basis points of upside there. High yield credit spreads bullish, middle of the range. S&P 500 that is neutral, middle of the range. VIX bearish. VAMs not quite in the middle of the range, but not overbought. NASDAQ 100 neutral. VAMs middle of the range. Russell 2000 neutral. VAMs middle of the range. Bitcoin bearish. VAMs. About 11% of downside. Ethereum bearish. VAMs got about 11% of downside there as well to the lower boundary of the probable range. The S&P Shanghai Composite neutral. VAMs middle of the range. Neutral VAMs crude oil in the middle of the range. Ag bearish. VAMs not quite middle of the range, but not overbought either. Bearish VAMs industrial metal, same deal there. So with that, Darius Dale presenting our macro minute for September 15, 2022. Best of luck out there today. We'll catch you back here tomorrow. Cheers.